Hi, this is Mark with the analysis for the week commencing the 26th of April. Very tricky markets, in fact very tricky markets for the last few months. We had on this USD Singapore dollar, we had a great run from October up until March where price was simply in a range, and we're in a channel. We're buying at the bottom of these moves and we're selling at the top, and it worked 6 or 7 times before we had a bit of a loss up here. And then if you remember a few weeks ago I showed you how I'd entered here again. I think I got taken out after about 30 pips profit, and then it got choppy. And I said before I went away, I said, look, if I was going to do anything with this now, if I was waiting for a break, I wanted a break of this trend line and this EMA. And it did it. It did it whilst I was away. This was the candle that broke, and the 55's rolling over, the 34's rolling over. Look how they were in charge all the way up on this move. It does look as though we're on for a drop. So what do you do? Well, we had dollar weakness all round last week, so it could be just part of this. But here we're looking at a channel, and let's have a look at the chart now with all my EMAs on. So I've fibbed it and I've got an EMA on, and the ways to play this, if you are a swing trader, if you're interested in taking the bounce and you think that we are simply in a respite, a pullback before a further continuation up, then this area here, 13200, is very interesting because it is an intersection of the trend line and the 200 EMA here on the daily. And if we scroll across to the left, you can also see that 13200 was an area of previous support and resistance. Now in this scenario, if I'm going to take this, the more conservative one is down here because you've got down here a weekly 55. But if I'm going to take this, I will only take it half stake. Because let's face it, you are going against everybody else is selling, and therefore it's a riskier trade. The more conservative trade is to look for a pullback anywhere up here around. And what you're looking for as ever, you're looking for multiple reasons. So if price was to pull back from its current position, then we have 61.8, the 55 and the 34 in the area, and we have the trend line not too far above. And of course, the further price goes along, if it drifts up, then eventually we may, towards the end of next week, get the pullback up here, which would be even better. So the more conservative approach, I am trading only from weekly and daily charts, and especially when things are choppy like this, I suggest that you do the same. But more conservative entry, more risky, and therefore reduce your amount staked. Equally the USDCAD. Now we had an 8-10 week period of time on a weekly chart where I was simply showing you I was taking shorts off the bounces at the top and longs at the bottom. Finally we had a loss. This was to do with major CAD news. I can't remember what it was now, but I said at the time, if you were waiting for price to pull back, then this trend line was a major area of interest. Now I missed this. I was away, it bounced up a few hundred pips, and it's now sat there. The difficulty is, as I said earlier, we have general USD weakness all around at the moment, and everything is pulling back. So how would you play the CAD? Well, from a weekly chart, the way I would play it, I would place a forward order down here anywhere around 170, because we have this 200 EMA on a monthly, we have the 55 weekly has crossed over it as well, and if we fib the recent move, it's also 78.6. So this to me is the main area on this pair. However, at this moment in time, it seems unlikely, and therefore intraday, if you're trading intraday, anywhere around 120, and I would watch this on a 4 hour. If you're going to go down to smaller time frames, I wouldn't go any lower than a 4 hour, but anywhere around 120. It's the psych level, previous support and resistance, 50% fib just above it. So there's a lot going on in this area, and if we were to start putting trend lines in for smaller time frames, we would have an intersection around here as well. So for multiple reasons, watch here, forward order for me there. A further thing to note with this CAD, this is with all my EMAs and everything on, you've also got the Bollinger Bands closing up, and this is usually a sign that price is going to dry up, and this will hit this area unless it turns down, and therefore, as I've just shown you, we would have multiple reasons. And I always look for as many reasons as possible to take a trade, but that is the area of prime interest for me. Euro yen, I've been in and out of this a few times recently. Remember, I showed you if this was to break, we could be on for a huge move on this, But I explained if you're trading off a weekly chart, you wait for the weekly candle to close. And daily it tried and it pressed and pressed and pressed, but then it's turned back inside. So lots of patience and discipline needed from a weekly perspective. But the ways to play this for me, either a weekly candle closes below and then I want to pull back, or I will place an order to short around 131.20. It is major previous support and resistance, as well as being a monthly 200 EMA. And once again, if we start to put trend lines in, I'm sure that we'd have some kind of reaction down here. And therefore, I will do that now. And further thing to note, because of the choppiness and messiness, and because of the dollar doubts at the moment of what's going on, and what's going on in the Eurozone with the Brexit, and what's going on in Japan, there's so many things going on. I would only be in one trade at a time at the moment, until or unless you can get your stop to entry, because it is risky and it is choppy and it is messy, and therefore don't be taking loads of trades until or unless you can get stops to entry. And also set yourself a limit for the week. If you say the maximum amount you are willing to lose in a week is 3% or 5% on the smaller account, if you lose that, then stop and walk away. A lot of pro traders at the minute are walking away because it is so messy. Aussie dollar and New Zealand dollar, and I showed you a few weeks ago, I had shorted here at a break of a recent low, and again this is another one that could go a lot of pips. Pulled back perfectly for an M2 entry, it went 200 or 300 pips, it then meandered along, and I showed you a few weeks ago where I was taken out. We're getting back to the area. Now this intraday is an interesting area to watch at 1029, so that's an interesting one. The major area on this is back up here at 10416, so anywhere around 104 you've got the 50% fib. This is a major area of support that goes back to 2005. And look what happened in 2005, it stopped to the pip almost at this area. So this is being watched by traders all over the world. And again, if we put a trend line in here and we mark off there, you have an intersection of the 50% fib, the trend line, previous support and resistance. That is one of my favored pairs this week. EURUSD, now this is my son's demo account, and he has an order in here that he's left in from a few weeks ago, just below 110, which is the major area. But as I said to you earlier, if we're going to see more dollar weakness across everything, we could see a bigger pullback on this, but 110 is still a decent area for me. I'm going to suggest to him he moves his stop a little bit higher below this recent low, but for multiple reasons, again, that is an area of interest to short the euro. And if it fails, I will simply look at other areas along the way to short the pair. I don't see that anything fundamentally has changed. However, keep your eye on the Swissy, because the Swissy and the euro dollar are highly correlated, meaning that when one's going up, the other one is going down. Now, it lost some of that when the SMB intervened in January and caused all the chaos and the mayhem. But if this was to break, and if this was to break this lot and even break down below 9400, then the USD Swissy could be on for a major move down, and the euro conversely would be on for a move up. So keep your eye on the Swissy for clues about the euro. At the moment, it is bouncing off these major monthly 55 and weekly 200 EMA. So it's bouncing here, and 9500 is a major cycle level as well. So there's a lot going on. But if this starts to go up again, the euro should go down, and vice versa. The pound. I have no idea with the pound at the moment. It makes no sense at all to me. If you read the British press, there is major fears that the Scottish nationalists are going to hold the balance of power, and or the Labour Party, and if they do get in, then they're promising to spend, which markets do not like. And the HSBC have threatened to leave as we get at each election. The big guys, the big money guys, are threatening that they're off. It's just too messy at the moment. I mean, the euro is similarly because of the Greek situation. If suddenly the Greek situation is temporarily solved, the euro may surge temporarily, and if there's a Greek exit, it could well collapse. But this, for me, at the minute, is just too messy. What do? I mean, you start to get back up here, 155.100, then yes, that's a major area of previous support and resistance. I might start to be interested, but I have no real clues on anything as to what's going to happen here. And really, you're looking at 157, even 160, and I just can't see it at the minute, guys. So for me, walk away, leave it alone and go find something else. Aussie dollar, similar scenario. We've been in this range for weeks, and again I've shown you if you're trading this on a for weekly, you wouldn't have taken any of these because you want the candle to break and close. But we're getting the Bollinger Bands closing up, we're getting the 55 crossing over a monthly 200 EMA in the near future. It is 61.8 of the recent move, and it is previous support and resistance. So once again, it seems unlikely at the minute, but if we get anywhere back up around 8300, I would definitely short the Aussie dollar. Intraday, as I've just shown you, it's just too messy. I mean, if it breaks and closes back below 7700 and a pullback, possibly worth it, because to the bottom of the channel is 150 pips, but not for me. Euro pound, usually one of my favourite pairs, did this beautiful move last year, all the way down from 2013, easy. Then it got a bit tricky, but we broke out here, and we showed you how we were looking for a pullback there, and a pullback originally there. So the way at the moment is it's just meandering around really, but on a longer term time frame, anywhere around 7400, 7450, I will be interested to short the euro against the pound. The caveat being that in 10 days time we have the British elections, and when it gets nearer to that I would be tempted to leave this pair alone. But at the moment, technically and fundamentally, the euro is in a worse state than the pound, and therefore anywhere back up here I will be interested to short. Dollar yen, showed you a few weeks ago, I've just left this, I just completely utterly ignored it. It is all over the place, it is meandering around, and what tends to happen with the dollar yen is it does this for ages and then it will make a major move, and I suspect that we could be on for a major move on this pair, but it could be in either direction. So the best way to play it, let it do its thing and then think about getting involved. New Zealand dollar against the USD. Again, I've had this area on my radar for the last few weeks, probably the last month, but this is one of those areas, multiple reasons, just above 78.6 fib, so anywhere around 78.50, 80, multiple reasons here why I would be interested to short this pair. Final thing, gold. Now gold is not my thing. Omar, on the other hand, does very well at gold and oil, and he posts in the forum under his section. But I noticed looking at this technically today, look at this on the daily, we are in a major triangle. Now, I'm sure Omar's been shorting here at 112.08 for the last few weeks because that's been a major area of support and resistance and it has the trend line. But we could be on for a major move, and a triangle breakout is that you measure the distance of the triangle, which is huge, and that should be reflected in the move. So whether it goes up or it goes down, we could be on for it. So keep your eye on it and keep going into the forum and listen to what Omar has to say. On I think it's a Tuesday and a Thursday, he posts in the forum his analysis that he gives members to his website on for trading gold and oil, and he posts it all in there, so check it out with him there. Okay, have a good week, tread carefully, don't be in too many trades at once, and keep your eye on those calendars as ever. Have a good week.